Hi, welcome to the Market Alert for Friday the 19th of December 2014. And just to get started here, we're going to look at the 5-minute chart. And if you look pre-market session from 7:30 yesterday morning all the way through to the beginning of the afternoon session, the market put on 240 points, so nearly 250 points in the pre-market session before the market actually opened. Now, when this happens, normally the market will trade sideways thereafter, which is precisely what we saw. If we just open these price bars just a bit more here, let's just reset the chart, and then what I'll do is just drag the chart over. So in the beginning of the pre-market, we see the selling coming in. This is followed by the buying, and this was the lowest price for the afternoon session as well. So we see the market coming back, closing above 17,550, and then trading through the 17,601, which the market manages to remain above until it closes below, and then we see the market drift back down towards the lows to the left there. So you can see from this low across, you can see there 17,526 is where the market found support, and this is where the market finds support again. This is a very interesting test bar, because if you look at the previous bar, you can see that the volume is 218 there at the top on the menu, and in the test bar we have 244, and the range is definitely narrower than the previous bar. So this indicates that the market is being bought back, and then we see the market closing back above the 17,550, and then it continues to make its way back up 100 points until late afternoon, when we see some selling coming into the market just below the 17,650. So we have a sell signal there, which unfortunately turned into a loss following the profit that we'd had earlier. And then eventually at 19:55, more news, and we see the market moving another 50 points just before the close. And then just after the close as well, when the market resumed, we see the market go up another 100 points there. But of course, that's outside of our trading times there. So a massive move yesterday, 50% of it put on before the market opened. Then we had another quarter during the trading session, and then after towards the end of the trading session, the last half an hour or so, and just after, we see the other 25% of the move. So a massive move back to the upside. I never expected to go that far yesterday. I mean, I'm expecting it to return, because as we've always had, is these V-shaped corrections in the market. This one is a very accelerated one back to the upside there. So the upside target is 17,986. So we're looking again for that 18,000 to be taken out. On the news front today, I don't think there's anything for the US, not a thing this afternoon. So it'll be interesting to see what the market actually does. And finally, on the implied volatility, we see this dropping down to 1461 yesterday from 16.61, I think, and 11.99 for the historic, which is now playing catch up to the implied volatility. So we got more or less 3/4 of the glass full of froth, and the market not quite pushing to the downside enough, but then we were given clues when we look at the chart, which I mentioned on the very day about all of this huge buying coming into the market, and then the Wednesday bar followed by Thursday. Just coming back to this, notice how less the volume is as well. This is prices being marked up. They are desperate to keep this Ponzi scheme alive, and will do anything to move it to the upside. And the only thing that's moved this market to the upside is one word, and that is patience. Which was used by Yellen in regards to increasing interest rates. Said patience is required, and that is all that has moved this market. That is not genuine buying. It's not new buying to the upside. This is a Ponzi scheme where they're trying to keep the market on the highs, and 18,000 is on the cards. possibly before Christmas as well. Right, so that's it for me for this morning, for this week also. I will see you in Monday's edition of the Market Alert. Have a great weekend. As ever, thank you for your support, very much appreciated. And as ever, thanks for watching, and I will see you in the next one.